The Roth IRA for real estate. Hey everyone, Adam Bergman here, tax attorney, founder of IRA Financial. And on today's AdBits, I'm going to explain the Roth IRA rules for buying real estate. Pretty cool stuff. So yes, you can use a Roth IRA to buy real estate, not just a regular IRA or a 401k. Code allows any IRA or retirement account to purchase real estate. So that is the good news. We know a Roth IRA is permitted to purchase real estate. There's only three things an IRA cannot do. Otherwise, there's nothing in the code that prohibits an IRA to do a particular investment. The first is life insurance. The second is collectibles like art. And thirdly, under Internal Revenue Code section 4975, you're not allowed to engage in a transaction involving your IRA in a transaction that directly or indirectly personally benefits a disqualified person, which is the Roth IRA owner, his or her lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, 50% or more. So, for example, you cannot take your Roth IRA and buy a house and live in it, or you can't take a Roth IRA and lend your child money to pay his or her rent. Otherwise, you can do it. So your Roth IRA could buy a multifamily apartment building, an Airbnb, can invest in a real estate fund, can do hard money loans for real estate, can buy and flip real estate, can do an option on real estate property, as long as the transaction does not violate those three aforementioned categories: life insurance, collectibles, and the larger, more broad category of prohibited transactions under 4975 of the tax code, they can be done. So what's the advantage of using a Roth IRA to buy real estate? Well, there's a lot. Okay, the first is a tax play, right? You don't get a tax deduction for making a Roth IRA contribution. In 2024, you can put away $7,000 or $8,000 if you're over 50. But here's the big but, and here's the juicy part. So long as you're over 59 and a half and the Roth IRA has been opened at least 5 years, everything you pull out of the Roth IRA would be tax-free. So let me just say that again. 59 and a half and 5 years, whatever you pull out of the Roth IRA will be tax-free. So that obviously is the first major advantage of using a Roth IRA to buy real estate, is you could shelter all the income and gains from tax as the investment's progressing. And you could take tax-free distributions from the Roth once you are 59 and a half and the Roth has been open at least 5 years. Okay, that's number one. Number two, diversification, right? Which any good wealth manager, investment advisor would tell you the key to success for any investment is diversification, right? You don't want to put all your eggs in one basket. You don't want to just put all your money in one stock. You want to diversify. Okay, and real estate is a great asset to diversify for a lot of reasons, like the hard asset, right? You can touch it. Great hedge against inflation, right? Generally, if you're doing residential rents, it's a 1 year rental term, maybe 2 years, but you can raise rents based off inflation tendencies. Okay, and real estate's always been perceived to be a very good hedge against inflation. Plus, for a lot of folks, real estate is something that they just understand and trust. There's some folks out there that just doesn't understand, including myself, why stocks go up or down, why the S&P 500 is up when inflation is high, what's going on. It doesn't make any sense. And with real estate, a lot of people just feel comfortable. They can drive around their community and see the house they own, right? Or they can take a picture of it and know it's theirs. They have title to it. They always can get a tenant to rent out the place. Even if it's not at a prime rate, they can still fill it up and get some cash flow. And the idea is that, hey, over the last 10 plus years, real estate has been a very, very, very high reward asset from an investment standpoint. So you get the cash flow on the rental income, and hopefully you also get the asset appreciation, which is very exciting to many, many investors. So when you add all that together, that's why real estate is the number one alternative asset investment class for IRA Financial clients and really across the board. I always give the example when I was a kid and you kind of did a survey of all the kids in my class, there's very few parents, dads and moms that were involved in real estate, right? You have some real estate agents and maybe it's like a developer here and there. But it just wasn't a big segment of the parent pool. And now over the last 20 years, you see a democratization of the real estate asset and industry where a lot of people feel more comfortable in it and people are finding ways to do it actively and passively. And they feel more comfortable investing passively in real estate than sometimes in stocks or other publicly traded securities. Why? All the aforementioned reasons: diversification, hard asset, hedge against inflation. Now, when you add in the fact that you can use a Roth IRA, which is still not as widely known as it should be, but it's a lot more known today than it was when I started IRA Financial 14 years ago, where people looked at me like I had two heads when I told people you can use your IRA to buy real estate. The first thing is, really? Second question is like, why would I want to do that? I'll just buy stocks. And people have realized, hey, there's been a lot of money made in flipping real estate, holding real estate, great cash flow, and the returns have been widely successful. So just to summarize the main points of today's podcast, yes, you can use a Roth IRA to buy real estate. The main advantage of a Roth IRA is the tax advantage. You can sell it tax-free. All the income and gains from the asset goes back to the IRA without tax. And then once you're 59 and a half, the Roth's been open 5 years, you can pull everything out tax-free. Okay. Plus you add all the other investment gains like diversification, hedge against inflation. Also, you get to invest in something that's tangible, something you can see, touch, and you trust maybe a little bit better than playing the stock market. And that's why real estate's become the most popular alternative asset class. And when you, again, just kind of couple that with the greatest tax shelter, legal tax shelter out there, the Roth IRA, it's not a shock to see why so many investors are looking to use a Roth IRA to buy real estate. Now, how do you start a Roth IRA? As I mentioned, if you have income, you can put away 7 or 8K. If you make more than 240,000 married, filed jointly, you have to do what's called a backdoor Roth IRA, where you essentially are making a contribution to the Roth, to an after-tax account and then converting to Roth. So that's just something to keep in mind. And you can also roll Roth funds into a Roth IRA, or if you have pre-tax IRA funds, you can convert them to Roth, and you would pay tax on the fair market value of the conversion. But if you can convert at a low value, then you would have the opportunity to shelter all that appreciation tax-free as it grows. So I'm a big Rother. I wrote a book, God We Trust and Roth We Prosper. I strongly believe in the Roth IRA. It's a great opportunity. And when you add the fact you can buy real estate, it's just, I think, a marriage made in heaven. So hope you guys enjoyed the podcast. If you're watching on YouTube, appreciate it. Have a great day. If you have a comment or question, please leave it. If you enjoyed the podcast, feel free to leave a review or give it a thumbs up. That's always greatly appreciated. That's it. It's another AdBits in the bag. Hope you guys enjoyed it. Have a great day, and I'll talk to everyone again soon. Thanks.